Company being analyzed today is Vikram Solar Limited. This is a company which manufactures solar panels and also installs them and also provides operation and maintenance services for these solar panels to its customers. Today, the aim is to analyze the company's financials, what it actually does, its future capacity expansion, and its future growth, and all of that. So, let us start. First, we have the market cap of 8,540 CR. So, it's a not a small company, mid cap company. The price to earnings ratio is 32.7 times. The current price of one is 236. The book value. What is book value? Assets minus liabilities. So book value per share is 81.6. Return on equity is pretty low, 16.6%. And return on capital employed is nice, 26.4%. But the figures are not always the more accurate on this website. When we come to the P&L statement, here we have the profit and loss in 2020 all the way to 2025. We have sales, operating profit margin. All these numbers are in crores. So in 2020, the company reported sales of 1,640 CR, then operating profit or EBITDA of only 140 crores. Then in the subsequent years, you can see not a lot of growth. 1,730 crores sales in 2022. In 2023, 2,073 crores in sales. Then the next 2 years are the better ones. 2024, 2,511 crores in sales, and 2025, 3,423 crores in sales with an EBITDA or operating profit of 492 CR. Okay, operating profit margin reached 14%. See, 14%. And finally, we come to the bottommost figure. The company had a net profit of 140 crores in fiscal year 2025. All right. In percentages terms, okay, the last 5 years, the compounded sales growth was 16%, which is all right. Last 3 years was 26%, and TTM, trailing 12 months, meaning the previous 12 months from now, was 36%, while the compounded profit growth was 46% last 5 years, 62% last 3 years, and 58% the trailing 12 months. Then comes the cash flows. Now, this is pretty impressive. The company is cash flow positive. Here we have the cash flows, focus on cash from operating activity. So 2020, 227 CR. Okay, 2021, 13. But then in the future, the company is always shown to be cash flow positive. 195 in 2023, 152 in 2024, and 299 in 2025. Now, what does the organization actually do? Here we have the quarterly highlights for the company. One important thing is the debt to equity only being 0.03 times. That is low. Net debt of only 12 CR. Net debt is the total debt minus the cash and cash equivalents. So being 12 CR is really good. Then in the quarter, the company sold 784 megawatts capacity worth of modules. Modules are basically panels. Its order book is 11.15 gigawatts. Order book refers to the orders the company already has from customers. And the effective CUF or the capacity utilization factor, what percentage of capacity is actually being utilized, is 84%, which is pretty good. The order book is 11.15 gigawatts, which is big. Vikram Solar. The current module manufacturing capacity is 4.5 gigawatts, but they're planning to increase this to 17.5 gigawatts. So you can see it's undergoing massive capacity expansion. But moreover, in addition to its 4.5 gigawatts it has right now, in addition to the 17.5 in total it is planning to have also a 12 gigawatts worth of solar cell capacity, which is a component in solar modules, and planning to have a new 5 gigawatts of battery energy storage systems, or BESS, which is basically solar produces power, and in order to store solar, storage systems have to be made. Batteries have to be made. So 5 gigawatts worth of what do you say, storage systems. Till date, till date, the company has sold 8.6 gigawatts worth of modules till date from starting to now, and already it has 11.15 gigawatts worth of an order book, meaning all the revenue that it made, the 1600 crores in 2020, all the way to the 3000 in 2025, you plus it all up, it came from 8.66 gigawatts worth of modules sold, and already it has an order book of 11.15 gigawatts. So current capacity, keep that in mind. And of course, massive capacity expansion, as you can see. All right, we will see that when does this new capacity actually come into operation. Okay, so here's the journey, a very impressive journey. That in 2015 the company had 500 megawatts worth of capacity. In 2017, doubled to 1 gigawatt. 2023 it's 3.5 gigawatt, and right now it's 4.5 gigawatt. So consistent growth, pretty consistent growth. Moving on, let's move on. Robust presence throughout India. So they're present in 19 states, 2 union territories. They have around 375 dealers across India. Okay. 100 plus authorized distributors. Distributors will sell to retailers. And they have two facilities, one in West Bengal, one in Tamil Nadu. The West Bengal one has 3.2 gigawatts worth of capacity. Tamil Nadu is 1.3 gigawatts worth of module manufacturing capacity, that is. And if you're wondering what these are, all facilities are N-type and mono-PERC capable. So N-type and mono-PERC are these new kinds, the new tech of solar modules. There was other type before, and new types are emerging. So they're trying to say this is the new stuff. This is not the outdated stuff. This is up to par. Now, this order book, what is it split? Split by geography first. So 85% is exports, and around 15%, sorry, 85% is domestic. Sorry, 85% is domestic, and around 15% of the entire gigawatt, sorry, the entire order book is exports. Split by customer. Now, this is interesting. 50%, 52% is IPP. Now, what are IPP? IPP are independent power producers. So basically, Vikram Solar is making panels for such companies whose objective, whose business model is selling power to other companies. So Vikram Solar will make a solar farm for, let's say, client A. Client A, all it does, it operates the solar farm, and the electricity generated from the solar farm, it just sells to other people. So IPP, independent power producer. So 52% of the order book is from clients which are IPP producers, 13% directly to distributors. A CNI is customer and industrial, so just selling this to like customers, like residential and companies selling solar modules. 11% selling solar panels to the government, and 7% is EPC, which I suspect is that they also install. They're installing the solar plant. This or basically it's EPC companies. I actually don't know. It could be either of them. EPC is either it is installing the solar plants themselves or solar panels too, or EPC means they're selling to companies which install the solar modules, if that makes sense. And you can see 36% increase in the total order book from September 2024 to September 2025, from 8.21 gigawatts in September 2024. All right, so domestic based company and IPP producers being 52% of the customers. Finally, we come to only two more things that is not to be shown. Yeah, when is this new capacity coming? So we are currently in quarter three fiscal year 2026, which ends in December. And quarter three fiscal year 2026 alone, the company is adding 5 gigawatts of capacity. So currently it has 4.5 gigawatts. Currently it's adding 5 gigawatts right now, quarter three. Should be done by quarter three fiscal year 2026. Then in quarter four, it is adding another 6, making the total capacity 15.5 gigawatts by the end of fiscal year 2026. We are currently in fiscal year 2026. So this is going to be recent, and it's going to be massive. Then quarter three fiscal year 2027, so many quarters later, actually 2 quarters later, cell capacity is going to be added, cell 3 gigawatts, and quarter four around 9 gigawatts of cell and 2 gigawatts of, what is this, modules. So by the end of fiscal year 2027, end 12 gigawatts of cell and 17.5 gigawatts of solar modules. Now, why is cell significant? Now, cell is a component of solar modules. For example, hypothetically, Vikram Solar is manufacturing modules and it needs cells. Let's say they are buying cells from other companies previously. So when they're buying cells from other companies, the cell manufacturers will always have their own profit margins. Obviously, let's say they have a 10 to 11% profit margin. Now, if Vikram Solar starts manufacturing these cells on their own, this 10% profit margin that they previously had to pay to the manufacturers, they can take it themselves. So basically, the profit margins will improve if they are manufacturing their own cells. This is known as backward integration. In the next 2 years, like we're currently in fiscal year 26, next year and a half, basically, next year and a half, the company's capacity is about to boom. Think about it, 4.5 gigawatts generated around like 3,200 crores in sales, 3,000 crores in sales, going to 17.5 gigawatts. So you can imagine the kind of growth the company is going for. It's massive. It's massive. And with cell capacity coming up, the margins, the profit margins will also increase. And finally, we have this. Cash flows, we already saw the cash flows are pretty good. And we have the balance sheet also. So what can we take look at here? Uh, Current liabilities. Okay, current liabilities are around 1,602 crores. Okay, current liabilities 1,602 crores. Current assets of 3,878 crores. So current assets are more than current liabilities. These are assets or liabilities which are about to be incurred in the next 12 months. Current assets, they can be sold in the next 12 months and converted into cash. Current liabilities are debts and all they have to pay within the next 12 months. So current assets being more than current liabilities, that's a pretty good thing. Non-current liabilities are 258 crores.